So we're going to take a look at Nvidia intraday, currently 8:40 a.m. Pacific Standard Time here. So very choppy market to kind of start the day. Yeah, at least that's what I'm seeing on social media. So I'm seeing a lot of people on Twitter and stock twits, saying it's choppy market. The market doesn't want to go up, it doesn't want to go down, so forth and so forth. So let's kind of look at the technicals and let me kind of explain to the newer traders, you know, what exactly is going on, how you can exactly take advantage of both, scalping to the long side as well as to the short side in a bear market or in a choppier environment. So one thing that we're going to do is we're going to be looking at the 5-minute time frame. Anytime you look at the smaller time frames, you are going to get a lot of messier price action. But in a volatile environment like we're in, it's a little bit more difficult to play, the 30-minute, the hour, the 4-hour time frames, just due to the fact that candles are so overextended that, if you were solely relying on the 1 hour, the 4-hour chart, yes, those are going to give you great macro levels to take scalps off of. But understand that if you're going to play them, that you're going to need to give yourself a lot more risk. And a lot of people are not comfortable using a lot of risk. Some people have very small accounts, so you can't really afford to take that. And some people just aren't experienced enough to kind of see, what's going on in front of your face. You're looking for, 20 different thousand indicators to tell you when it's time to buy and when it's time to sell. At the end of the day, you missed the whole trade. So what I want to show you guys here is that in the pre-market here, we did have a nice run up on the futures, as well as a lot of tech stocks. Same thing with Nvidia, started to run up in the futures. So if we kind of just look at this area here, the price of 177.46, this was going to be the pre-market highs here. First candle out of the gates kind of pushes higher, gets rejected at the Bollinger Band, and then immediately starts to wash out for 25 minutes. So there's two ways that you could have potentially taken this trade, two potential trades, three potential trades within the first hour to hour and a half here. But this is going to come with experience, So a lot of people, especially newer traders, and I see this all the time, they're looking for, this setup to this setup to this setup. They're looking for the stocks to do this. They're looking for this indicator, and they're looking for this moving average, and they're looking for this, that, and the other. To be quite honest, it's just, creating nothing but a just a cluster mess, and the decision making is not there. Look at, there's only two things that are going to happen when you enter into a trade. You're going to win the trade or you're going to lose the trade. That's it. Now, does everyone win trades? Of course. Does everyone lose trades? Of course. But the real big determining factor is if you're going to be able to do this long term on a serious level is, can you handle those losses? I see a lot of people that, they don't want to lose, they want so much verification and they want so much clarity that they miss the trade. You miss the potential move, right? Here comes the train to the station. They're loading everyone on and you're checking around for your suitcase. Do you got your coat on? And then next thing you know, you look up and the train's gone. So same thing with trading here. If you have a strategy, trust your strategy. And if you don't trust your strategy, well, then go find one that you can trust. The moral of the story here is, if we kind of just look at what happens here, this is where, analyzing technical analysis at a very high rate of speed is going to benefit you tenfold. Some people analyze information and process information a lot slower. Some people, it takes them many years before they kind of acquire that skill. And some people are just a lot more natural. Okay. And I see both ends of the spectrum all of the time. But when I start looking at this chart here, the first thing that I'm analyzing here is, okay, big run up in the pre-market. Do we take out pre-market highs? Potentially we have room. That's the first thing I'm thinking. If we take out pre-market highs, potentially we have room. Where do we have room to? The next area we have room to is the next area of supply. That's up here at the linear regression. That price is going to be at 179. Let's just call it an ace, a spade, a spade. We take out pre-market highs. Potentially we have room for, a scalp off the bell into the 179. That obviously does not happen. So what's my next setup? I know that pre-market lows are all the way down here. What I'm looking for is, does this start to lose some of my demand zones? 20 SMA being a big demand zone for me that I like to follow, the 20, the 50, as well as the 200. And as we lose this 20 SMA here, all I'm thinking to myself is, okay, if this confirms, I'm going to go ahead and get short. Okay. So I always recommend newer traders to kind of stay away from the first 5 to 20 minutes of the market. But if you're comfortable taking those trades, I'm very comfortable taking those trades myself. I'll take those trades. You know, half the time they're going to win, or maybe 50% of the time, maybe 40% of the time they'll hit, and maybe the other 60% of the time they do not, just due to the fact that the market is so volatile in there. So here's what I would recommend. If you have a small account, stay away from the first 30 minutes of the market. I don't care. And I consider a small account anyone under 10,000. So if you're trading with someone, if you're trading with an account size of under $10,000, just stay the hell away from the first 30 minutes of the market. Yes, you might miss some trades. Yes, you know, you're going to feel a little bit of anxiety and FOMO because everyone else is trading, and you're looking around on social media and, you know, people are getting out of trades and you still haven't taken a trade. So what, right? So what? You just don't have the capital to be able to take those trades. For example, if you have a large account and you take this short setup here that we got below the 20 period moving average. So this short setup 174.40 came all the way down to 171. So this is a $2.5–3 move here. Plenty of room for a scalper or a day trader to make money, especially if you're playing options. You go in the money or right at the money. You take 5, 6, 7, 8 contracts. You know, you get a $2 or $3 move in your favor in the money. You're definitely going to be cashing out, maybe even calling it a day, depending on, you know, what kind of profit targets you like to hit or your comfortability level. But if you have a small account and let's say you take this trade and then it snaps back on you and you have to stop out of it, then you know you're out of bullets and you end the day with the losing trade. And then, you know, then next thing you know, the market comes back down and flushes and you're like, oh well, if I just would have held this, you know, I would have made money. So you know, that's why, you know, people with smaller accounts, you know, you kind of have to pick your spots a little bit more wisely. And that doesn't mean that, you know, you have to wait for the perfect setup, but you know, I just wouldn't recommend trading the first 30 minutes of the market open. So this was your first setup here. Obviously analyzing that we did not take out pre-market highs. That's telling me I'm looking for a short setup. As soon as we lose a 20 period moving average, I'm looking to get short. Whether this works for me or it doesn't, I already know where my stop loss is going to be. You know, we break down below the 20, we close, get a 5-minute candle close over the 20, the 5, the 10. I'm going to just get the hell out of the trade and cut my losses and look for the next one. And I also know that just because we've lost this 20 SMA here, I'm not looking for 10 points down. I'm not looking to come all the way down to the lows, previous day's lows at around 168. I'm just looking for a couple bucks. When I get those couple bucks, I'm just going to clear my position. I'll wait for the next setup here. The next setup that I'm going to get is going to be a bottoming out process here when we do reclaim the 200-day moving average and we start to make a push higher. You could look here, the next candle that does close over the 20 SMA gives you a high wick of around 177.66 and gives you 1, 2, here's a pause candle, 3 pushes higher, which I always recommend. Try to take between 2 and 4 pushes higher. And that price comes all the way up to 181. So even with that being said, there's another $3 in a trade here. If you would take in these trades correctly, you would be 2 for 2. And then here's your third trade, you know, within the first hour and a half of the market open. 175 is your entry. You obviously know that the day's lows are here, so you want to make sure you take profits before those day's lows. If you would like to hold a runner, but make sure you lock in profits. What do I always recommend? 2, 3, or 4 pushes lower or higher depending on the direction. So if you were to enter into this stock at 175.50, here's your first push lower. Here's your second push lower. Here's your third push lower, comes at around 173. That's about a $2 move. If you would hold for the fourth push down here, you would get the stock all the way down into the 171s. And then you would be thinking about taking those profits. So here's where a lot of newer traders have a mistake. They think that because they take this short position here, that they're going to be able to hold this for 6 hours, you know, close the day with the stock being way down here. You know, they're thinking, well, I got a short setup here, so I'm going to be able to just take this all the way down. Doesn't work that way. They're thinking, well, you know, we did flush, now we bounce. Maybe the market's going to come up. They think it's going to go all the way to the moon. It doesn't work that way. You know, are you investing or are you swing trading? Are you scalping or are we day trading here? You know, there's a big difference. You know, there's a big difference between swing trading and day trading. Completely two different ball games here. We're looking for $1, $2, $3, $4 on a scalp, on a day trade, especially when we're trading high beta. If you don't know what high beta stocks are, you probably shouldn't even be day trading to begin with. So, you know, learn these things before you start, you know, trying to, run the marathon here. But with that being said, as soon as we did make these new highs after taking out the pre-market highs, we have not yet taken out the highs again. So my momentum is still down. Stock like Nvidia can continue to bounce here, but as long as it stays under the day's highs here, the momentum is still to the downside. So I'll be looking for one of two things. I'll be looking to take out these lows or this low wick for the next short potential down here into the 168. Only reason I'm going to get long is if we can sort of clear out all this level of supply. So here's another setup that gets a little tricky. If we kind of look here, if the price action breaks this, back test it, and now push higher, well, I'll take this long position. But that does not mean that we're going to take out all-time high or the day's highs. It does not mean that. What it means is I'm looking to scalp here and I'm looking to sell somewhere in here, okay, before we get to this next area of resistance. That's all you're doing. It's rinse, wash, and repeat. So if you have, let's say, $1,000 account, well, you can't do that. You can only maybe take one trade a day. And whether that trade works for you or it doesn't, that's all you can really do. You're not shooting for the stars and you're not trying to make $1,000 a day. If you can make 50 bucks, trading $1,000 account, great. Continue to do that until you have $5,000 and $10,000 and $20,000 and $30,000 and just kind of scale up your positions accordingly. I hope this video kind of helps. Just wanted to give you guys an inside perspective. I know a lot of people, they say, the market's choppy, we can't, it's, I don't know what to do, or, there's no trades because the market's choppy. Guys, there's trades all day, every single day. It's just how well can you analyze them and how well can you, set yourself up to realize, when to take a trade and when not to take a trade. And also, how well can you manage your risk? Like I said, trading, there's only two outcomes. You're going to win or you're going to lose. Now, if you're scared to lose and you're looking for every reason why you're going to, try to take a trade to win 100% of the time, you end up missing trades and you end up still losing in the end. So it's analyze the data in front of you. Present yourself with the best opportunity to take the trade, and if the trade does not work, get the hell out of the trade. And there's nothing saying that you can't enter a trade, sell it 10 minutes later because the trade fails, and just look for another setup. The problem is that people who are undercapitalized or have smaller accounts, they don't want to let go of their trade because they're emotional and they think that the trade is coming back. And, if I hold a little bit longer, maybe I give myself a better chance. Screw that. Forget about that nonsense. If you feel that way, then you don't have enough money to trade. That's the bare, honest truth. Go pick up a second job, maybe do a side hustle, maybe sell things on eBay, maybe sell things on Etsy, or pick up some kind of side hustle. I don't know, drive Uber or DoorDash or something. Save a little bit more money and then have that comfortability level to be able to play the way you want to play. Because if you can't take trades accordingly, and because your account balance is going to force you to hold a losing trade, you do not belong to trade. Also, if you are looking for every single, star to align in a perfect world to be able to take a trade, it's not going to happen. Okay, it's just not going to happen. You have a specific strategy. You follow the rules for your specific strategy. You wait for that to happen. If it happens, you take the trade. Not let like if you're playing a 20 SMA breakdown and you say, well, I'm not going to take it because I think we're going to bounce today. Well, then guess what? You missed out on a trade. If you don't take this play here that reconfirms the 20 SMA because you're like, well, I don't know, we had a big sell off the market open and, I'm waiting for this to happen. Well, guess what, buddy? You missed out on another trade. When it starts coming down again and you start telling yourself, well, we haven't, taken out the day's lows yet. And I don't know. Well, guess what? You missed out on your third opportunity for another trade. So quit over analyzing things, quit overthinking things, and just start taking the trades, that get presented to yourself. And also, if you do have a smaller sized account, there's no harm, there's no foul in being able to just take one trade a day. That's completely fine. But just understand that those trades are going to work or they're going to fail. And if they fail, then maybe you have to sit out till the next day. And a lot of things that a lot of people don't have is patience. If you don't have patience in this game of trading, you will fail. It's as simple as that. I'm probably one of the most realist people when it comes to teaching technical analysis on YouTube. So many times, I look at other, big time YouTubers that are pumping their stocks or saying, you just have to buy this and just hold this and XYZ and blah, 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 and Fed talk this and inflation this and, balance sheet this and fundamentals that. Guys, that all sounds cute. It sounds great, but let's be realistic. Let's look at what the data that's going on in front of our faces, and let's act accordingly. Everyone manage their money accordingly. Everyone be smart. Stop looking to piggyback off of other people. If you can't see these things on your own and you're waiting for somebody else to kind of, piggyback you, I'm just being quite honest. You're not going to make it in this game of trading. I see a lot of people on social media that are looking to other people to kind of get answers. Should I buy the stock here? What do you think the stock is going to do here? If you can't identify those things on your own, then you need to take a little bit more time and take maybe a back seat and learn to just, identify these setups on your own. So like I said, stock that we were watching today was Nvda, 5-minute time frame. I hope you guys enjoyed this technical analysis video and hope you guys subscribe, join the Discord. I'll see you guys all later.